Yo, 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 what's the dealio, y'all? Hey, listen, you already know today I got a banger for you, all right? In this video, we're gonna be talking about swing trading, all right? Some swing trading principles I like to live by. And at the end of this video, make sure you watch this video to the end because I'm gonna give you a couple different swing trading strategies that I like to use, all right? So if you don't know, swing trading is just when you hold for maybe a couple days, longer than a day, or a couple weeks to a couple months. All right. Now, I personally swing trade. I like swing trading a lot better than I like scalp trading, but I also do enjoy scalp trading as well. So when you want to think about both of all the types of trading, you got to understand that the reason why swing trading is so powerful is because you're able to capture a bigger move, which also means that you're going to make more profit on a trade, right? So when you think about it, let's just think about this real quick, right? Swing trading. Let's say that you're trading Tesla today and you get in Tesla at $300 and you get out at $302. That's a nice move. But let's say you're in a swing trade with Tesla, you got in at 298 and then the next 3 days later, the Tesla went to 310. Now you would have got that $12 move off of Tesla, been able to cash out and being able to go from there. So I like swing trading. I also like scalp trading / day trading, but I like swing trading because you can enter a position, manage the position. You don't have to be in front of the computer all day for hours at a time. You can literally enter in a position, know what the charts are saying, and then go from there. All right. Now, here's some important things to understand about swinging, right? You want to understand that this is the beautiful part of trading. No matter what time frame you're on, once you learn how to read candlesticks, it don't matter the time frame. That's the best part about it. So whatever the candlesticks mean on a 5-minute, they're going to mean the same thing on a daily. Whatever they mean on a 15-minute, they're going to mean the same thing on a weekly time frame. You just have to be able to say, okay, I'm looking at the weekly time frame. This move may take a little bit longer, right? It may take 3 weeks instead of a day, right? So those are the main things right there. Now, when I'm swing trading, I'm not paying attention to the 15-minute. I'm not paying attention to the 30-minute. I'm not even paying attention to the hourly, right? My swing trading strategies, I'm looking at the 4-hour, I'm looking at the daily, and I'm looking at the weekly time frame on swing trading. All right, make sure you remember that right there. I'm looking at the 4-hour, the daily, and the weekly. Now, anytime that you have a longer outlook, the more likely you're going to be successful with trading. That's why scalp trading is so hard, or / day trading, because you're trying to get in and out in a matter of minutes when you're scalping, right? You almost have to be almost perfect when you're scalping because you're looking at the perfect entry and the perfect exit. When we're looking at swing trading, you can make a lot of money swing trading and you ain't even got to really be the best trader, because if you are zooming out and you're basing things off of where the market is going and the trend is going, if we're in a bull market, you're gonna make money, right? The only time you start to lose a lot of money swinging is if you start oversizing your trades and you're not managing your trades and you don't know what market we're in, okay? And so I'm gonna talk about all those things, but the longer the outlook, the higher the likelihood and the probability of your success. And so swing trading, I'm not gonna say it's easy, but it's relatively easy if we wanna compare it to scalp trading, because you can go to the daily time frame, look at the trends, and then be like, okay, this makes sense. And then you'll be able to capture bigger moves as well. All right, so like I say, the 4-hour, the daily, and the weekly time frame. When I'm looking at the 4-hour time frame, this may be if I am looking to hold a stock overnight, right? Overnight. The daily time frame could be overnight or the next 2 to 3 days, or the next, week and a half. The weekly time frame is okay, I'm going to swing this for the next 2 to 3 weeks because I think that over the next couple weeks, we're going to get a lot of bullish action on this stock, right? So remember, the weekly time frame is a longer time frame. You could also look at the monthly time frame, but you might be looking at leaps at that point. Okay. The next thing is, what stop loss do I use for swings? That's a big question that I know people ask. Now, swings is very interesting because I've had swings like back in the day, like I would say like last year, I had swings that I was down 60% in, and then because I had enough time on my contract, they recovered and I made 80-90% returns on those contracts, right? So when you're swing trading, you want to know your rationale, and you also want to know why you're getting in and why you're getting out. And you also want to know how much time you have left, because you can be down on a swing 40%, but if you have 4 months to go, I wouldn't be worried about that. And this is also why I say get a separate account for your swing trades. If you know me now, you know I always say that. Have a separate account for your day trading account. Have a separate account for your swing trading account, right? Because you want to be able to know what you're doing and like where, like what things are looking like. If you have a day trade account, a scalp trading account, and then you have a swing trade in that account, let's say you're holding a swing trade for 3 weeks, and let's say it's down 40%. If you got 10 grand in that account, but this one play is down, let's say it's down 40%. And so it shows that, and let's say that 40% is down 2 grand. It shows that your account only has 8 grand in it, but it's unrealized losses, right? And so what happens is it's easy to get caught up in, oh, I'm down in my swing trade. I'm not going to perform as best when I'm day trading now because I already in my mind have a loss taken into account. So please, 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 please make sure you get a separate account for swing trading and for day trading. I can't say it enough. Okay, those things are extremely important when we're talking about trading. And so now we're going back to stop losses. What should your stop loss be? You want to know what level you're getting in at. Are you getting in at a demand level? Are you getting in at a supply level? Are you getting in at resistance? Is this a double bottom? Is this a double top? Is it a put? Is it a call? It all depends. So with swing trading, you have to be comfortable with whatever it is because it can recover with the proper amount of time. With the proper amount of time on the contract. Also, if we're in a bull market, right? Let's say we're in a bull market. If you're in a call, and let's say we get a pullback, it's not going to be down for too long. But that is only if we're in a bull market. If we're in a bear market and you get a call and then it pulls back, let's say it comes down a little bit and you're up and then it goes up a little bit, right? And then you're down. I wouldn't be afraid of that because it's going to come back down, right? So you want to understand if I'm getting in a call, am I in a bear market or is this a certain specific strategy? So with swing trading, it's more important to know when to take profits than it is what should my stop loss be. That's my opinion because it is a skill knowing when to take profits. It's a skill knowing when to take profits because I've been in the swings where a day, 2 days later, I was up 50%. I didn't take profits. And then I was down. I let it go from up 50% to down 10, 15%. And then it hovered around there for like 2 or 3 weeks. And then the second I got into profit or negative 5%, I get out and then the stock ends up going up, right? And then I could have been back to my 50%. So you got to start to understand time versus money. I always say this, time versus money, right? If I get into a swing trade and I'm up 50 to 60% the next day, I will probably take those profits because it's called securing profits, right? And then on a pullback, As long as the technical analysis is still there and the setup is still there, I may get back in and then go back up, because we could get a pullback and I could get a better entry. Now, not everybody feels the same way, but that's how I like to do it. I'm a big proponent of actually securing profits and making these profits a realized gains, right? That's one of the biggest things for me. I don't want to have all these unrealized gains and then it reverses on me and now I'm asked out. I want to have realized gains on the way, right? You could take, if you have 5 contracts, 7 contracts, you could take profit on 4 and then leave 3. Like, there's a lot of different ways that you can do it. All right, so that's what I have to say about the stop loss. I will say it is user discretion, but you have to know what strategy you're trading and what setup you're trading as well. And you have to make sure you give yourself enough time. The only time, the most of the time that you're going to take your biggest losses on your swing trades is when you don't give yourself enough time and you get in at the wrong level and or you panic sell. Those are the main reasons why I've lost money on my swing trades, right? Now, I'm going to give you guys 3 strategies that I like to swing trade with, okay? So first one we have is gap fills, all right? I'll show you guys an example, but last week, it was a simple gap fill that I saw on MU. That's how we was able to do that one. The next strategy is going to be bullish engulfings. These work like magic on a daily and a weekly time frame. It's like butter, all right? And then the next one is going to be recovery, okay? So gap fills. If I see gaps on the daily time frame and we're getting close to that gap, I will enter into a swing and then ride it up and let it fill the gap. If that's gap fills. Bullish engulfings. If I see a bullish engulfing on the daily or the weekly time frame, I'll enter into a swing because that is a bullish indicator. All right? And you can do the same thing for bearish engulfings as well if you see the same thing. And then the last one is recoveries. If we see a stock, let's say it misses earnings, but it's a great company. Let's say something crazy happened with like CPI or something like that, and the whole market just dropped. I may enter into a swing if it's a good company because I know it's going to recover. So that's recoveries, right? So we got gap fills, we got bullish engulfings or bearish engulfings, and then we also have recoveries. All right, so I'm going to go to the charts and I'm going to show you these things like in real time. So let's go to the charts and I'm going to show you guys gap fills first. All right, so let's look at gap fills. All right, so let's go to MU. All right, so today the market is just consolidating, so nothing is going on today, so it hasn't been the best day to trade. But let's go look at the daily time frame. So let's look at this right here. This is MU, right? So look, we have a gap right here, and then I got into a swing right here, and then boom, right? It filled the gap the next day, and then I collected about 32% on that. I made a video about it last week. But people in the Discord, they made more money. And if we would have held it into today, we would have been really eating even better because it came all the way up here today. All right. So it's simple. When you see a gap, right, you can enter into a swing. Once the stock is close to a gap, swing it for about 2 weeks, and then it should fill that gap. And then you could take profits once the gap is filled. All right. Let me show you guys another example of this. Let's go to Netflix. This was a massive one. Let's go to Netflix real quick. Let me show y'all. Look at Netflix, y'all. So this is on a daily time frame, right? All right, so look. So I remember Netflix had earnings, right? And they gapped up. They gapped up from here to here. Right? From here, from 868 all the way to 950, right? And then they ended up filling this gap right here, right? 2 days they filled the gap. All right. So so think about it. This gap was right here. Boom, right? Boom. So if you see that there's a gap, you just got to chart out your gaps when we're looking at the daily time frame. But when you see a gap like this and the stock is getting close, you can literally just enter into a swing because it has momentum going towards the gap. The gap is like a magnet, right? And then once it starts to get real close to that, you can set this out a couple weeks, maybe a month out, and then boom, right? Ride it. Once it fills the gap, you collect your profits and you're done. It's simple as that. All right. That is gap fills. Now let's do bullish and bearish engulfings. Now let's look at Robinhood. All right, this is on the daily, but let's go to the weekly. Look at the weekly time frame on Robinhood. This right here is a bullish engulfing, right? So on the week it ended out at $43. Okay, so it engulfed this candle right here. The next week it ended up closing at $41. It went up to $44.86. All right, but that next week it went all the way up to $49. So you would have got a move from $43 to $49. That's a $5 move right there, $6 move right there. That's a pretty nice move right there. If you would have held it, longer, then that means that you would have went even higher, right? It came all the way up to 54. So if you would have got in right here from 43 to 54, that's a $9 move right there. That's over 100% on a stock like Robinhood. Okay, so that's a bullish engulfing right there. All right, now let's go to Nvidia and go look at, that's on a weekly time frame, right? Let's go look at this bullish engulfing as well. This candle right here engulfed this candle right here, and then boom, over the next couple weeks, we going up, right? So that's a bullish engulfing. Now if we go to the daily time frame, let's look at the bearish engulfings. All right, look at this one. Look at this one. This is a big red candle. It engulfed this candle right here, and then look what happened. We had 2 days of straight selling pressure. So you could have rolled that to the downside, right? It closed at 140 or 139, 140, and then it ended up coming all the way down to 135, and then it even opened up right here at 129. So you could have took it down from 140 down to 129, sold for profits, and then got out. Look at this one. This is another bearish engulfing right here, okay? Big red candle engulfs it. It closed at 120, right? It came up and opened at 124, but then it went all the way down to 114. All right. This is on a daily time frame, so that's an engulfing pattern right there. All right. And then we got recoveries. Now let's look at recoveries real quick. Let's say, here's a good example right here. Recoveries are a little tricky because they're not going to just recover immediately. Sometimes they will, but sometimes they won't. All right, so look at this one. This is another bearish engulfing right here, and then it gapped down massively, okay? So it came all the way down to 118, okay? And then it ended up coming down to 114, and then it recovered, all right? But if you see something like this, this is a gap as well, okay? So a recovery plus a gap. So boom and boom, right? So this is a gap. So when you see something drop like this, and then it comes down a little bit more and you start to see it starting to come up and it gets closer to there, boom, right? You could swing that and then say, okay, I'm gonna get out when it hits that, when it finishes closing that gap right there. All right, so you could look at recoveries as gap fills. It just depends on, if we're looking at if it gapped down or if it had a bad day. So a good example is Google right here, okay? The other day, Google had a really red day. Okay, a very strong red day. Look at this candle right here, okay? So let's say at the end of this day, it closed at 151. So if you got in a swing trade to the upside right here, then that next day, you would have been up about 40% because you're getting in on a recovery right here, okay? If you would have held it for 3 days, 1, 2, 3, right? That's $8 move. That's an $8 move right there. You would have been able to collect a nice penny, but you see how there's a gap right here. So Google is going to come down to fill this gap at some point, and then it will go back to the upside. But that's what I mean when I say a recovery. Okay. And so if you see a stock have a big red candle like this, if the stock does not come up to halfway of the big red candle, then it's going to end up coming to the back to the downside. But if it does come halfway here, then it's going to probably start to go to the upside again. Okay. But that's a recovery right there. All right. So a great company like Google ain't going to stay down for too long. All right. So if you get in right here and you see that, oh, they just had some news, they're going to get over it real quick, then boom. All right. You can sit here and get in on a swing a month out, and then you can ride them to the upside, because this right here, it ain't going to be down. It ain't going to go down from 163 all the way down to 151. And then it touched 148 in a day. And then it's just not going to, it's just going to just keep going down. It don't go like that. All right. This green line is a weekly level right here. And then this right here is a Bollinger Band. So it bounced off the Bollinger Band, which lets you know that it is going to start going back to the upside. All right. So that's gap fills. That's bullish and bearish engulfings. And then also that is recoveries. All right. So always remember that you have to find your style. You have to find what works for you when we're talking about swing trading. But you can collect way bigger moves when we're talking about swing trading. And this is how you can grow your account from 3K to 10K in a couple weeks, right? With the right swing trade, you could change your life. No lie. With the right swing trade, you can literally change your life. I'm not just saying that, I've lived it. All right. So that's why there's an abundance of money out there when we're talking about swing trades, because in a matter of a couple weeks with the right swing trade, your life could be completely different. All right. So I hope that helped. Like I always say, make sure you get out of your head and go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm going to see you guys on the next video. Peace.